Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
A very good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is a high-impact weekly live webinar focused exclusively for Smartkarma Plus subscribers. We discuss the best, highest conviction insights surfaced across the Smartkarma network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. At the end of every week, we make recordings of the Smartkarma forum and upload them to our YouTube channel. This allows you to revisit some of the key ideas at your own time and own pace, and also share them with friends. In this week's forum, we will look at Alibaba and how growth avenues for the company seem to be closing down fast. We will then move focus to the biggest question on our minds, which is, are we in a recession? And if so, is the US Fed tightening rightly or wrongly? And lastly, we will examine the semiconductor space, where we will explore a growing thesis that semiconductors have reached a turning point. Alibaba, first things first, this is a large cap. It is dual listed in the US as well as in Hong Kong. The Hong Kong listing, which is 9988, is increasingly becoming the more dominant listing. Alibaba was a very well-owned growth stock for China tech. It has increasingly shifted from growth to the value territory, and now we're exploring whether there are merits to look at it even from a value perspective. The insight we will reference today was written by Oshadi Kumarasiri on the platform, and he has covered this name for a while now. We will not go into detail on what Alibaba Group does. We expect you would be familiar by now, but it is the dominant technology company in China, and its services range everywhere from online e-commerce to internet infrastructure, financial services, as well as content services. We noted that the first quarter results from Alibaba were very disappointing. Both revenue and operating profit declined year on year, with operating profit down as much as 19% year on year. We noticed that the company has stopped disclosing active users in their recent earnings. This to us is a worrying sign and indicates that growth might be in trouble. Cash cows for Alibaba, which are Taba and Tmall, the GMV on these two sites has now declined year on year for 2 quarters in a row and is now below China's retail sales growth number. We notice that consensus expectations still remain very ambitious and the name remains very well held. This is a cause of worry. Moving on to the biggest macro theme at the moment, which is the US Fed tightening and indications of a recession. We reference an insight published by Michael J. Howell, founder of Cross-Border Capital, on the platform. We see evidence now that the US and the world economies are already in a recession. We expect things to get much worse from here, with a near 20% decline in liquidity due to Fed's monetary squeeze, as well as the jump in energy prices. We notice that liquidity injections into the US money markets have flatlined for 8 to 10 weeks. We anticipate that the US Fed is only 6 months away from a probable policy pivot, which is when they start to potentially reduce hikes or even relax. However, we think that the damage to the economy is already significant and it still needs to be fully digested by investors. Risk reward is not in our favor. Moving on to the third and final thematic, which is the semiconductor space. We will reference Jim Handy, who's an industry expert on this space, having worked at large semiconductor firms for most of his career and now running an independent research firm called Objective Analysis. We all know that semiconductors has been in a spectacular bull run. In fact, it's been a space that we've long favored on Smartkarma. However, the world semiconductor trade statistics now seem to indicate flat to down sales trend. Recent Earnings calls from the major chip makers also indicate poor outlook for the current quarter. We noticed that Intel reported below guidance in the second quarter and a worse outlook as well. We expect revenues to steadily decline over the remainder of 2022 and throughout 2023. Indications suggest that this is most likely the beginning of a 18-month slump in semiconductors. Let's continue the conversation on Smartkarma. Thank you.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.